Brett, we've seen crypto be a force for good. We've seen it be a force possibly for bad, or maybe there are some Russian oligarchs trying to get their funds out of the country, especially now if there's going to be capital controls and using crypto to do so. What does it reveal to you?
There's really two aspects to the story here. First, as a decentralized medium of exchange, we're seeing the power of cryptocurrency unfold in real time. People all around the world are able to contribute crypto directly either to the Ukrainian government through their public addresses they've posted, or to relief organizations that are on the ground helping out in the situation in Ukraine. More than $20 million worth of Bitcoin, Ether, stable coins, and other crypto assets have been donated in this way. And we think that's probably behind a lot of the rallies we're seeing in crypto as people understand that promise. On the other side of it is people saying that crypto could be used as a way for example, sanctioned individuals to avoid such sanctions.
Right.
And it's something that we understand to be largely untrue.
Largely untrue to this point. Why is that?
So in order for people to be able to convert their fiat currency into crypto, or to do the off-ramp, to take crypto off the exchange and go to fiat currency like ruble or dollar, they have to go through some exchange that's regulated to be able to interact with a bank. And so through exchanges, we have a number of sophisticated tool sets that allow us to understand who are sanctioned individuals, sanctioned nations, be able to track cryptocurrency and fiat deposits and withdrawals, and make sure that we block those users, as we have been doing since our inception.
So there's no way for them to basically get access to the crypto without going through those channels. So can you speak at all, Brett, to activity today in the last couple of days on your platforms? Where's it coming from? Who's buying? How large are the transactions? What are you seeing? What changes are there?
Sure. In general, we're seeing a lot of what we typically see every day. Large institutions making plays either in one direction or another. Most of the volume at FTX comes from institutional liquidity. A lot of this is trading around the uncertainty in the market, especially as we see these large dislocations between crypto and traditional assets. We're going to see increased volatility, increased interest in trading the assets. So that's primarily what we're seeing on the exchange as far as liquidity goes.
Let me ask you a question that may be tricky and may be proprietary. What have you had to do in light of the sanctions that were announced over the last week or so in terms of being in compliance with them? That's number one. And have you, to your knowledge, had to block or stop any transaction as a result of those sanctions?
Right. So first, cryptocurrency exchanges like FTX are required by our different regulatory authorities that we operate under to monitor and have in real time government international sanctioned lists and make sure that we block any transaction, whether that be crypto or fiat, in and out of the platform. That's something that we do every day. And so as these lists get updated, we are automatically making sure that we are blocking those transactions, those users. We're also in very close contact and have initiated contact with the U.S. government, the Treasury, the Fed, making sure that we are engaging in a dialogue with them to find out what the best course in action is for us to make sure that we're complying with the situation as it continues to unfold in real time.